You're listening to Inside Real Estate, your source for all things mortgage and real estate related. The show that brings you all the hottest topics and insights directly from those who know it most. Now sit back and enjoy the show.
You know, the big banks and direct lenders out there were kind of taking over the market. Brokers kind of got decimated due to like regulation, and they were kind of blamed for all the bad stuff that happened. What made you decide at that point, very early on in your career, to bet on the broker?
Well, I've always, been prideful of not necessarily just following what everyone else does. And so a lot of people went to the big banks. A lot of people think the retail lenders and the branch models was kind of where everything was going. And I kind of took a step back and looked at it, and I kind of was always in wholesale, and we had to make a decision, what's the future look like? And the fact of the matter is, when I did all the analysis, regardless of what everyone else was saying and all the rhetoric that the mega retail lenders and big banks want to put on TV and talk about, it comes back to what's best for the customer. Everything starts with the customer. So we analyze, what does the consumer really need? They need great service, great price, great options. And every time we did the analysis, it's always better for someone to be working with an independent mortgage broker. And so we did that, and we kind of looked around and said, gosh, no one else is saying this. Maybe I got to double check this work again. Maybe I'm missing something. And then I kept doing it and saying, gosh, it's better for the consumer to go to a broker. Why don't we focus on that? And then I thought, okay, well, what about the loan officers, the people that are actually talking to the consumer? What's better for them? Same analysis. Figured out where should they be working at? Should they be working at a broker? Should they be working at a retail lender? Should they be working at a bank? And what I found out is they can serve their clients better when they're at an independent mortgage broker, and they can make more money themselves. But more importantly, they can give a better product, a better mortgage, better price, and better service than a retail lender can. And that's the majority of the time if it's done right. And so it obviously you got to be great. And so once we figured those two things out, we said, gosh, everyone's going left, we're going to go right. And we think that the best place to invest all of our capital, all of our technology, all of our now 2,700 people is in the wholesale channel, and that's what we've done. And not that it's never over. You're always going, but right now, the bets we made in 2011, 12, and 13 are really winning in 2017, 18, and 19 because everyone else is starting to see it, that the broker is the best place. So consumers that are listening or watching or talking to people, they start to realize that you should be going to an independent. You should be going to someone that can shop on your behalf. When a consumer goes to a retail lender, that retail loan officer talking to them works for the lender. When you go to an independent, the loan officer works for the consumer. There's a big difference. And so the alignment of incentives are aligned that way. And so we bet all in on it, and it's going well. And we're going to continue to bet all in it because whatever's best for the consumer usually pans out for everyone else, and that's where we're focused.
So, yeah, Matt, I mean, I was very fortunate to be there early on when I kind of lived through a lot of that. Obviously, at that time, you did have more of a retail channel, and, I was on that side at that time. But one thing that always struck me as surprising is you made another choice early on to focus on the purchase transaction and really kind of go after the higher-end credit scores and not really kind of, play in the mud and kind of just try to, like, take every deal, right? You were very cognizant of making sure that you were bringing in quality. So talk to me a little bit and talk to the audience a little bit about why that worked, what made you decide to do that, what your mentality was about that.
Yeah, absolutely. Well, first off, when you were here, Paul, it was great. And when we decided to change from having a retail presence to just wholesale, and you and along with other people did a fantastic job of being part of that and a huge part of our success and our growth back then. And now, obviously, as you're independent and out there, seeing the way we've done things on this side is hopefully helping you as you're building your business so successfully in your market, which is awesome to see. And hopefully, on the purchase side where I know you thrive at helping people with purchases, you and your company have done great. Same with us. That's what we focus on, because the thing is, when rates drop, refinances, everyone can lower their rate and lower the payment, and it's not that complicated. And there are some companies that are built just on that's what we do is refinance, and obviously God bless them, but that's not a long-term thing. As the rates have been going up, you can't always refinance, and it's not always in the best interest of a consumer to shove them into a lower term or try to put them into an ARM and change it out and give them cash out. Like, that's not what's best for the consumer. So we always focus on what's best for the consumer. And when people are buying homes and making that American dream come true with a purchase for a husband and wife or whoever it may be, that's what it's all about. And so we really focus on purchase, and that's where we've always differentiated on purchase. And purchases are more complicated. You have a lot of more people involved. You have a buyer and a seller. Okay, not just one borrower refinancing. You have real estate agents, title companies that are sometimes two title companies. So it's a much more complex scenario. And we figured if we're great at that and we do a wonderful job serving our clients in that, then we can obviously do the refinances. And that's kind of how it's worked and what we focused on, and it's working well. And then on the client side, like what clients do we serve, it's all about a success story and making sure the client is happy. So back to client experience. We've chosen to only focus on the loans that we know we can deliver excellence. And if we can't deliver excellence, we tell them, hey, listen, this is not for us. Maybe someone else can do it, but we're not the best at everything in the world. Just like no one's the best at everything. We're the best at what we know we're best at. And that's purchases, that's certain type of clients that we can make sure we close on time, fast, and then when they close in the house and they get those keys and our broker's there with them, they say, wow, what an amazing experience. I'm going to refer my cousins and friends to this broker, and then if that happens, that broker hopefully will work with us at UWM, and we'll grow. So if they grow, we grow, and that's the only way our business works. And so that's why we focus on the purchase and those types of clients.
Yeah, and for sure, Matt and Sal, you know this. Being that Sal was at UWM as well, it left a mark on us. Like it kind of matches our business model today. We're all purchase.
Basically, I mean, we set everything up the way that UWM taught us to teach our brokers, right? And
we modeled right after
being able to use that experience for them to translate that to our actual clients, right? They have the visibility that we as a broker have with UWM. Everyone can communicate, everyone can talk, we can get the deal done. It's very smooth. There's a lot of options, a lot of programs. It's really what I think, my experience at UWM led me to my next path in life, which is being a broker.
Yeah, no, absolutely. And it's funny, Matt, you had an article in 2011, and in that article, your goal was to go from top 50 wholesale lender to top 10. Well, I think in 2013, you guys ended up being the number one lender in the country. Am I right about that one?
2015. So actually it took us a little longer, but in 2015 and then obviously 16, 17, and then we will be again this year. So it's been 4 consecutive years now, but 15 was the first year. But yeah, it was a lofty goal back then, and it's still a hard thing to do. There's a lot of great competitors out there that we have to compete with every single day.
Yeah, and today you've actually widened the gap between you and pretty much everyone else. It's not even I feel like now watching you from the outside in, it's like almost like how far ahead can you get now, right?
And the way we think about it is like we have a lot of great competitors, and so we're focused on every day being great every day, so that you and Sal and Brad and your whole company, everyone that you work with, have an amazing experience. So you're like, wow, I got to get more clients towards UWM because they make me look good to the real estate agents and build your business. And so it's really big about that. And what's happened is over the last couple of years, we've got a lot of great competitors, but we've focused on helping our brokers, our partners, build their business and their reputation. And since they've built their business, we've built ours. And so, that's kind of how we've grown. And yeah, I think the number 2 lender in the country is a company called Caliber Home Loans. They're a great lender. And back then we were a little bit bigger than them. I think this year right now we're, maybe 3.5, almost 4 times their size. We'll call it 3 times, whatever the number is. We're significantly bigger. Does that mean we're 3 times better than them? No. It just means that our brokers that have partnered with us have grown probably 3 times faster than the brokers that have partnered with them. And so that's what we're all about, is partnering with people that will partner with us. And it's got to be a 1-to-1 ratio where everyone wins together. They win, we win, the consumers win, realtors win, and if everyone's winning, we're all in a good place.
Yeah, and I think part of your success, Matt, is you and I've been in meetings at the higher levels, and I know that you obsess about creating value for your partners. I mean, it is something that you constantly are thinking about. How do I add more value? And one of the reasons people use UWM and as an account executive that made my job easy, it was, listen, we do X, Y, Z, 1, 2, 3, 4, 5. We do all this stuff for you to really support our partners. And it's impressive the amount of things that UWM has done and is looking to do. So talk to the audience a little bit about what you think like the future holds. Like because today you offer a lot of bells and whistles, right? That make our lives. I don't think we could do what we do today without a lot of the support that we have. So talk to us a little bit about what you see coming up and what else. Talk to us about a little bit about how you want to keep adding value.
Yeah, I mean that's the game. And at the end of the day, for us and then for you as well at your company, you got to differentiate yourself on value. There's always price, there's always service, and there's always ease, right? Like how do you make things easy, fast, great service, and a great price? Like to do all those things. And so the value adds come within those buckets. And so how do you add value on price? How do you add value? And that might be by differentiating in different interest rates and offering different products where you can help maybe a different MI program like mortgage insurance. And so there's different ways to differentiate within that bucket. And then the same thing goes for differentiation on service, right? And differentiate in technology. And so technology is a great example where my job is to differentiate technology. What does that mean? That means make the process really easy for you guys to work with us, but more importantly, make it so that you have something of value for your consumers or for the real estate agents so you differentiate. Because once again, the only way UWM has grown to where we're at is because places like your company, Paul, Sale, Brad, you guys have grown. And if you don't grow, then I got no chance. And so we have to differentiate in value and helping you be successful. What matters to you? Making sure you take great care of your consumers. Make sure that the realtors understand that you will always hit that contract date. And so that's what it's all about. It's all about adding value and figuring out what does your customer need. And so we're always talking about customers. What do our clients need? There's 100 of our clients are here today. I'm always talking to different clients and figuring out what can we do better? What would help you? And that's why we rolled out some stuff today. We'll roll out some more stuff next week. We're always coming out with something to hopefully add value. And if it doesn't add enough value, we tweak it and tweak it and tweak it until it does. Or we say, hey, what should we do different? And that's why it's been great to have great partners throughout America who give us ideas, and we're going to keep tweaking it and making things better and then leading the way, hopefully, to help you build your business, and then we'll build ours right next to you.
Yeah, and let's be realistic, Brad. I mean, we talk about this all the time. We talk about how do we add value to our real estate agents, our referral partners? How do we add value to our clients? And one of the things that I think UWM has done a very good job with is giving us some tools where we can say, hey, we've got some things that make us different, that we can add some value to our partners. Wouldn't you say that's true?
Absolutely. So one of those things is the marketing toolbox and things like that, where we can create our own stuff. But my question is, you guys are getting bigger and bigger, and more people are using you. Now it's not so much a differentiator for us anymore, or at some point it won't be, right? So what are your plans to keep adding value to each individual account as you have more and more accounts? Are you going to start bracketing different accounts off? What is your plan there?
Yeah, no, that's a great question. The way I look at it is, with all the data, with all the facts, with the fact that if you went to an independent mortgage broker, you will get a lower interest rate than if you went directly to the retail lender. That's not an opinion. That's a factual statement. It's been proven over and over. With all these facts, the mortgage brokers are still only 15 to 20% of the market. They used to be plus 50, over 50%. It's going back there. And so that question you asked me, Brad, will be much more of a relevant question when we get back to 40, 50% in the broker channel. Because right now you don't compete with each other. Right. Us brokers, we're all on the same team. You compete with Wells Fargo. You compete with Chase. You compete with Quicken Loans, Bank of America. These are the top 4 or 5 retail lenders in America. That's the competition, not an independent mortgage broker down the street from you. And so right now, we're all about adding value and growing the channel. But that will be a good question and something that I'm definitely thinking about already for 2020 and 21 when brokers become 25, 30, 35. As they keep growing, Brad, absolutely, it's like, well, hey, listen, if you're giving this to everyone, it's really not differentiating because we're all competing with each other as an independent brokers. And I look forward to that problem and having to solve that problem.
Yeah, that's not,
but I don't.
I know it's ways out the road, but I'm just curious. I know
that's not a bad problem to have, brother.
I know. I know Matt thinks super far ahead, and Matt, you're really smart. And
all right.
So
relax.
But one of the things that I know you've been building out a lot of your own technology, right? One of them is you guys are building your own LOS because, you realize along with every other person in this industry that LOS systems really suck, and the good ones are really expensive, right? So I'm really curious. I've been meaning to ask you this. When you guys are done with your LOS that you guys have built that's super easy for anyone to use, are you planning on licensing that out to your accounts?
So we've looked at a lot of things. I think, there's a lot of great technology opportunities in there. We're definitely focused on the experience once you get into our system. And then we got to think about how do we help you succeed and what are your obstacles that you may have trying to run your business. And so we definitely looked at building this thing. I got about 475 actually, IT people here, technology innovators coming up with ways to help you guys build your business, be successful. So we label different things from what are the needs our clients have and how do we help solve for them. And I think what you're hitting on is one that's definitely out there. We built our own for our own internal people internally to make sure that we can serve our clients faster and more efficiently. Now, building one externally is something that's definitely been discussed, but at the same time, we got to make sure that it's it's got to get it's got to be something that will work for thousands and thousands and thousands of people across America. So we're definitely have looked at that, and it's just figuring out where on the priority level does that stand, or does from a perspective of what we can do. And so we're rolling out some things in the next week or two that aren't in that realm, that are mostly focused on how do we make the inches, how do we pick up an inch, and every inch we pick up will help you guys be more successful. So it's definitely something on the table. We're not there yet. But it just from a priority perspective, we think there's other things that we can add more value before we get to that level.
Yeah, man, and I know you touched on this. You're super passionate about this. I want to hear from you why you believe the broker channel is better than going to like a direct lender, or, these Wells and everybody else that you mentioned earlier. What is it about the broker channel that makes it gives someone an advantage as a consumer?
Well, for a consumer, it's so easy. I mean, the facts of the matter are the broker, the independent mortgage broker, has access to all these great lenders. So there's a lot of great lenders out in America, right? There's a lot of people you can go to directly. But if you go to the independent mortgage, they will shop on your behalf and get you the wholesale pricing that you couldn't get on your own. So think about it. Like someone's like, well, it doesn't make sense. Like you want to cut the middleman out. No, not in mortgages. You actually need the middleman. Think about it like if you're painting your house. Like you go to Sherwin-Williams or a paint company, you get you'll go out there and get a bucket of paint for whatever it costs. But if your contractor who's painting your house, he gets a contractor discount. That's what brokers are. They get you a contractor's discount on a mortgage. There'd be no reason to ever go to one of those mega lenders. Like I said, there's a lot of successful companies, whether it's a Wells, whether it's a Chase, whether it's a Bank of America, whether it's a Quicken Loans, whether it's a guaranteed rate, successful companies out there. But you would always get a better deal if you went to them through an independent broker, or if you went to an independent broker that says, great, all those guys are great, but the best deal for you is at, Caliber, at UWM, or at, that's the broker's job, the expert. The contractor is going to get you the discount at all those places, and you will always get a better deal. And so it's a no-brainer for a consumer. There'd be, we have 2,700 people at our company here. We don't even do the mortgage for them. We tell them you got to go to a broker. Go talk to Paul at Omega. Go talk to other great people locally, and we'll set you up independently, and then hopefully the loan comes to us. But if it doesn't, it's okay, because what's best for the consumer is all that matters. And there's other lenders that might have a program or a price on a program that's better than what we offer, and that's perfectly fine, because it's what you ought to start with the customer. You can't say I want it all to come to me and be selfish about it, because that's not what's best, and that's a defensive play, not an offensive play. An offensive play is get the consumers to the best place, which is independent brokers, and the independent brokers will get them to the best place. And sometimes it's my company, and sometimes it's other lenders, and that's perfectly fine as long as the consumers know they got to start with the broker. And if they do that, they're always going to end up winning, and so will we, and so will the whole industry, to be honest.
Yeah, and a lot of companies in today's market are entering the wholesale space and trying to kind of dabble in it. With that being said, you made a decision to go completely wholesale and completely cut out any retail. You have 0 retail loan officers at the company, which is not typical for a lot of companies, because there's a lot of money to be made on the retail side. How do you see that as an advantage? Why did you do that, and why do you think that it might not work to have both factions in the same house for the broker community?
Yeah, having both channels is what everyone else does, and it's not right, because I would not feel good about anyone getting a loan through my retail channel that has worse pricing than going through a broker that gives them a better deal. Like, why would I give a consumer a worse deal, like, directly? And that's just the wrong mindset, and that's what a lot of people do. And you know what? It will catch up to them eventually, right? You can't do that. You can't give a consumer a worse deal. And so the way we tell them is we want to give the consumers the best deal we can every single time, which is what I offer an independent mortgage broker. And so we're really big on that. And yes, you can make a lot more money if you do that in retail. Like, I make more money on the retail loans, but that's chasing money. We chase success here at UWM. We're all about success. Money follows success every time. And so we're not sitting here trying to figure out, we can make more money if this borrower called us directly, so I'm just going to make more money on the loan. That's a loser's mentality, and we're all about winning. And winning is helping our partners grow, and if they grow and they help their consumers get a great mortgage and achieve their dreams, and all, we're going to end up winning at the end of the day. I'm not worried about that. So the mindset has to be do right by others, take care of the consumer, It all starts with the client. The client is the consumer, and what's best for the consumer? It's going to a broker. And so, yes, a lot of people have started playing in the wholesale market, but they're playing in it because, hey, business is slow. There's less refis in the market, or hey, some of our loan officers have left us, so let's start going to the wholesale market. But they're not being genuine about doing right by customers and partnering with people, and that's where the difference is. And it can work for a year. You can throw a price out there. You can throw a special out there. You can do a commercial, like all this stuff. It's great. God bless everybody. But long-term winnings takes time and takes grind and takes consistency. And you have to be consistently great every day. And that's really hard to do in wholesale. And that's why a lot of people don't play in wholesale, because you're not captive to me. No consumer, like your consumers, brokers that we work with, they're loyal to me until they're not. And they love us until they don't. And if they have a bad experience today, tomorrow they use my competitors. And it's a really hard way to live. But if you're in retail, like where these people all invest their money in, you're captive. You can have a bad experience today, and there's really nothing the loan officer can do or the consumer can do. They have to stay with you. And so that's the difference, and that's why the independent way is always better. And we've invested in independence of helping brokers succeed, and we have to compete for our business every single day. It's like training every day. It's like, think about if you're like an NBA player, if you every single day you had to compete to be on that team. And if you didn't play well, they can cut you that day. You don't get paid tomorrow. You'd be really good. You'd be executing flawlessly. Or if you sign, like the retail is like you sign a 7-year contract. It's like, well, I'm getting paid for 7 years. It's kind of, I'm set, right? Like I don't have to work. I'm not grinding at 9 p.m. tonight, because tomorrow I'm getting paid either way. They can't cut me. And so that's kind of how we think about it in wholesale. It's like I'm on a 1-day contract every single day, a 1-loan contract. And if I'm not great, someone else would love to take that next loan. And so that's where we compete every day.
So, Matt, you touched on it a little bit, but I mean, some people would say that's a really smart decision. Some people would say it's a really convenient decision, because the industry is in cycles, right? So right now we're on the upcycle where refis are going away, interest rates are rising. So a big portion of what a retail channel does for a company is client retention, right? A lot of refis. Since rates are rising and that kind of client retention is basically going to be minimal and going away, a lot of people would say that's very convenient for you, and give it 6 years when we start to make the downturn as far as interest rates and refis start coming back. Watch, they'll come back at retail. What are your plans for retail in the future? Are there any?
Zero plans. Never. There's no reason to be in retail when I got 35,000 awesome loan officers that are independent brokers out there. So retail is a cop-out.
Right.
Being a retail, of course I could have a retail business. I mean, if you put retail and wholesale combined, we're depending on the numbers, the 3rd, 4th, or 5th largest mortgage company in America. If you talk just purchases, we're the 2nd largest, right behind Wells Fargo in America, and that's not even doing retail. And so we definitely, I get those numbers, and I know that the retail channel. But the thing is, I got 35,000 amazing loan officers out there that we can work with, and I have to earn their business every day. And so it's a cop-out to say, well, why don't I just go do retail, or when rates drop, I'll just start the retention. But that's a loser's mentality. That's a money grab moment. It's not a long-term business play. And so, yeah, definitely, and it's the same thing in reverse. Right now, people are doing the money grab moment to come into wholesale, right? Like, oh, well, retail refis have slowed down, and retail's like, great, well, I got to get into wholesale right now then. Wait, that's great. That's a money grab moment. God bless everyone. Come on in. But the long-term players, and most mortgage brokers get it, right? They know who the long-term partners are. And when you can look someone in the eye and say, I'm looking to help you grow and help you build your business, I'm not only here about myself, that's a powerful statement. And when you can actually back it up with facts and data rather than just rhetoric, it's a big difference. And that's what we're all about. We're focusing on helping our clients grow, and there's no desire ever to be in retail, because retail is the wrong channel. Like, I wouldn't even want, if I could get all my consumers to come directly to me rather than the brokers, I wouldn't be able to deliver as great of a product and price and service as my brokers can, because I'm not the right lender for everything. There's no one lender in America that can do every loan, and that is the right, and can price every loan great, and can give great service on everything. It's just not possible. That's why independent mortgage brokers are so valuable, because they know where UWM's strengths, they know where Flagstar's strengths are, they know where Caliber's weaknesses are, or Quicken's weaknesses are, or Quicken's strengths are, or Caliber's strengths are, or our weaknesses are. Like, you know where to go with them, and no consumer could ever know that, because they do a mortgage once every 3 to 5 or 7 years. You got to go to the expert. you got to go to the expert, which is the mortgage broker, and we have no desire to try to be everything to everyone. We're just going to be the best wholesale lender in America and consistently serve our clients, our brokers, and their clients, the consumers, every single day.
And, yeah, I think that's probably one of the greatest points of being a mortgage broker is the ability to adapt to the environment, the situation, the raising rate environment, a falling rate environment, knowing where your next loans are going by having the technology and the information from them. So I think that technology, which I think Paul's going to touch on here shortly, is largely probably where things, in my eyes, are going to be driving who's the next, or who will continue to be the best lenders out there by what they can offer to their partners.
Yeah. And so we'll get into the technology. I have just two more questions on the Brokers Better topic. So, Matt, recently the Association of Independent Mortgage Brokers, or AIM, was created to, they're bringing brokers together across the country. UWM was an early supporter of this. I think there's a conference coming up here in 9 days where a lot of people are going to be getting together. Very early on, UWM supported this initiative, and I think it's telling, obviously, but tell the audience and tell everybody that's listening why you think this organization is actually super important.
Well, I think with anything, there's 35,000 independent loan officers in America. And so that group of brokers is the largest mortgage company in America by far. There's no one, you can add the top couple mortgage companies together, they don't have 35,000 loan officers. And so if you think of it that way, problem is they were acting all independent. They're all, 3-person here, 5-person there, and it's hard to have a voice. What this association is doing, along with NAM had tried to do in the past, and NAM's done a good job, by the way. I'm a supporter of NAM as well, which is National Association of Mortgage Brokers. But what I think this Association of Independent Mortgage Experts, AIM, has done a fantastic job of is really uniting them and giving them a voice and a strength. So now they're actually speaking as 30,000 loan officers rather than speaking as 5 and 3, and people are listening. Lenders like myself, I have to react. I have to react to what AIM says and does and thinks because they represent a huge amount of mortgage brokers throughout America. And so it's really the key to mortgage broker success is having a voice. Because if they're all independent, then lenders can do what they want and can take advantage and do things the wrong way, and there's really nothing you can do about it. That's the truth of the matter is when you're a 3-person shop, because it's just not as big as a 30,000, even a 5,000. So as AIM has grown and been more successful, lenders have had to react, and lenders had to sharpen their policies, make things better, invest in wholesale even more, or guess what? They all talk to each other. You don't have a chance. And so AIM is so critical to the success of independent mortgage experts and brokers and even correspondents that don't underwrite their loans. Like independent companies have to be a part of it, and they are, to be honest with you. And I'm actually speaking at that event. I think it's October 20th, next weekend. I'm speaking at that event, and I'm proud. I'm excited to see everyone out there and really uniting together. A unified group is so much more important, more than a bunch of independents that don't have any, focused voice. And so, Anthony Casa, Mark Summers, that whole group that started that thing and got it going has done a fantastic job, and we're proud to support it. And really anything that supports mortgage brokers, we support. And the why is because they all support consumers, and that's the best place for a consumer to get a loan. And so we're all in on that. And so AIM has been great. We're excited to be there, and mortgage brokers are out there listening to it. Obviously, hopefully they're there too, because it's going to be a huge show. I think it's going to be the biggest show, at least from the numbers I was told by the people at AIM, biggest show of any mortgage event in years from a broker perspective. So it's going to be awesome. Yeah,
I've seen a lot on it. It looks like a really, really good show. Unfortunately, I can't go. And to piggyback off that, so AIM was started, and then an offshoot kind of was brokers rallying against wholesale lending, or brawl. It's in the news. A brawl broke on in the mortgage industry, so on and so forth. They created like a scorecard for all these lenders out there. And the word wholesale is kind of new to the industry, right? Nobody really had coined a phrase like that. What does wholesale mean, and why do you believe it's dangerous to the brokers?
Well, it's really an important thing going on in the mortgage market right now. It's kind of tied to what we just talked about, having a voice. For years and years and years, even back when we were small enough at our company, when we were a broker, right, or even a small correspondent, like you'd sell loans to an investor, so not a lender, not a partner, an investor, and that investor would then think that they bought your customer and the loan, not just the loan. And so what Brawl came out and basically said was, hey, guys, if I'm going to send my customer, I got this customer I'm working with, and I'm going to place them with you at your company, make sure you treat them well, first off, which is critical, and make sure you respect that I have that relationship. It's not your relationship. Like, I'm bringing you to them. And what happened was, this is not what's been going on. A lot of wholesale lenders forever have said, I'm buying the loan and the customer. Like, thanks, Mr. Broker, I'm paying you a fee. You're out. You're out of the way. This is my customer. And that's what a lot of lenders, and that's why people would still invest in wholesale, because they're saying, like, well, why are you in wholesale? Well, I'm trying to buy up a bunch of customers, so when the next refi boom hits, I'll refinance them. And what Brawl basically came out, and it didn't really do anything besides educate brokers. And it's like there's been some shady stuff going on, and all of a sudden, boom, you put a light on it, and everyone kind of scattered and said, oh, we weren't doing that. We weren't going to do that. And it's like a lot of rhetoric around that we're not doing that. But the truth of the matter is, whose customer is it? Like, nobody owns the customer, but the truth of the matter is, you got to respect the relationship and who started that relationship. And so the relationship between a broker and that consumer has to be sacred and has to be respected, and it's not to be violated by a lender like us or any other lender. And so that's what Brawl brought out. And for the most part, lenders have reacted positively to it. Even the lenders like us that have always been so pro-broker, we've even improved from it. So it's been a positive. We've like, oh, that's a good point. We hadn't thought about doing that, so we're doing that now too. And we've done things to really support brokers. And then there's been some lenders that basically said, we're not going to do that. That's not how we believe. And by the way, I respect those lenders saying that. And then there's some lenders that say, oh, we're going to do that, but they're really not, right? And so there's some lenders that basically want to say one thing and do another. That's the problem. Like, hey, everyone has their own business model. Like, if some places, and there's some companies out there that said, hey, we don't believe in that. We're buying the loan and the customer, and that's just the way it is. But we give a great price and great service. Please use us. Like, I respect that. I don't agree with that business, but I respect at least that they're honest and forthright. But there's been some that say, we're not going to do it, and then they still do it and try to hide, and then they're saying, oh, don't worry about it, and try to divert and sell around it. And that's causing an issue because brokers out there are saying, wait, I'm trying to build a business. I'm not trying to just do loans. So if you start thinking relationship and long-term rather than transactional and short-term, that's where Brawl comes in. And so it's basically made brokers start thinking long-term rather than short-term, and it's really changed the game. It's made everyone aware of what's going on. It's been, I think, a positive thing in the industry because it's helped brokers succeed further, which helps consumers as well.
Do you see any of those lenders that are on like the naughty list, let's call it, or the lower level of that are really capital rich, that are looking at the market and kind of saying, okay, we're going to go after this part of this segment of the business? I know that UWM has been doing this for so long that you're so far ahead, but these guys have a lot of capital. Do you see, like, are you ever looking back in the rear view and saying, okay, all right, so they're starting to come up. Okay, I'm seeing they're doing X, right? Is there any like thought about that, or are you just moving forward?
Not at all. It doesn't even cross my mind. Like when you're on top, everyone's going to take a shot at you. Everyone's going to say what they want to say, and it's easy because you're on the bottom, and people just want to say what they want to say. And so, it doesn't even cross my mind, to be honest with you. People that have a lot of capital, people that are big banks, people that are going to join the market and going to come in. Like, hey, it's a lot easier to say you're going to do something than actually do it. And so to come in the market and compete, like I'm supportive of anyone that comes in and competes. Like I think it's actually healthy. Like someone asked me, like, wait, would you think? Fantastic, because the better the wholesale lenders are, the better the mortgage broker channel is. And even if my market share at UWM from 21% or 23%, whatever it is today, down to 15%, but it was a bigger channel because the channel is stronger, I'm all supportive of that. I want healthy competition. What we have a problem with, and what Brawl brought up, was like people that were disingenuous, people that are in the market for now because rates have went up. It's convenient that I better get in wholesale right now. Because I need to buy some customers, and I'm not getting them through my refi channel. And so now I want to come into wholesale, and then when it changes, I'm going to go back. And I'm not going to tell you that, but I'm going to say that's what I'm going to do. And so that's been more of an issue, and it's been obvious. And a lot of brokers know this, and there's a lot of brokers that have fought back against that type of behavior, and it's pretty evident in our market. So do I look at any one or two or three competitors as an issue? No, I don't. I look at them as, if you're not good for brokers, I got an issue with you. And that's why I tell people all the time, like, I have no issue with any of my competition. I have an issue with my brokers' competition. And my brokers' competition, people that are doing wrong by them, that's who I'm fighting. Like the enemy of my friend is my enemy as well. And that's how I think about it.
Yeah. And speaking of that, obviously, it's really competitive. It's a really competitive business. So, I mean, really, like this whole initiative, like you said, competition is good. Let's see what happens. I'm really interested to see what happens with all this that's going on. Let's talk about technology, Matt. Obviously, you guys spend a lot of money. I've been in your technology part of the company. It's really grown. The new building's amazing. They've got all the resources in the world, and you guys are really, really pushing the technology envelope, comparatively speaking, to a lot of other wholesale lenders that haven't really spent a lot of time, money, and resources on it, because it is an expensive endeavor, and you chose early on to do it. Why is it so important for UWM to provide great technology to brokers? Obviously, for us, we know why it's important. We don't have the resources to create all this technology. And for you, what made you decide to really spend the money and really go after the technology piece?
Well, not just the mortgage industry, but every industry, technology is only going to become more and more relevant. It's just going to be more. There's not less technology. It's not like we're not going to go back to faxing things again, right? This is not how the world's going to be. And so technology is the key. And so a lot of times, independent mortgage brokers, our customers, don't have, 475 IT people. They probably have 4 people, the whole company, 5 people, 10 people. They're independent, and that's good for consumers because they are able to offer the consumer, if low overhead, they can offer the consumer a better all-in deal. They can make less margin on the loan and be able to pass that margin on to the consumer. So technology, so that's good. But the problem is where everyone thought brokers were going to go away and struggle was only because that they didn't have the technology. And how are they going to compete in a technological environment? And that's what a lot of the mega lenders were hoping for, is that brokers weren't going to be able to compete. Well, we basically said, well, in order for our customer to thrive and for the consumer to get great deals, we got to build the technology and give it to them. And that's what we did. We built the technology. We made applications to help brokers, independents, compete with these mega lenders that are building this stuff, and basically make it so that it's not captive to us. Like, here's the technology, Paul, and your team, but we still got to earn the loan. Like, this is just a partnership thing. Here's the technology, but hopefully we earn the loan too, but it doesn't have to come to us. And that do right by others with no expectation of anything in return is a mindset that most people won't do. But if you do it, you're going to thrive. And so technology, we have 475 IT people. I always tell people when I speak, talk to brokers, like, oh, well, I don't have any IT people. I go, you have 475 IT people because everyone on my team is on your team. All we're doing is building it for you. And that's how we think about it. We're trying to help you grow and help you succeed. And if you need this technology, great, we'll build it and we'll give it to you. And there's nothing that we're doing besides helping you be successful so that you can serve consumers better at a great price, great service, and an easy process. And that's really what it comes down to.
Awesome. Just a couple more questions, man. We'll be all set. Just real quick,
sure.
Do you ever see technology? It's the digital mortgage. Everybody's trying to get from soup to nuts, get it done on your phone, on the app, get it all squared away, and have a mortgage within 5-6 days. Do you see that? Is that where we're going, in your opinion, or is it going somewhere else? Because it's hard to tell today. Because a lot of there's no real digital experience just yet, and I'm interested in your opinion on what you see, the actual technology. How will that actually enhance or change the process?
So there's only going to be more technology, not less. Now, I'm a real big supporter of what I consider human-enabled technology. You need humans, people, because of relationships, to use the technology to make them more efficient. So what's going to happen is I don't see, like, put my thumb on a phone and I get a mortgage. Like, just a silly concept. It's not realistic right now. Now, could that happen in 10, 15, 20 years? Yeah, when that happens, every mortgage company you've ever heard of is gone. It's just going to be, there's nothing left. Because all the funding source is just done. But that's not happening now, and I don't see that happening for a long time because, you know what? Mortgages aren't like airplane tickets. It's not a commodity. It's a relationship thing that happens once every 3, 5, 7 years, and it's a big deal. And most people, although you and I and all, Sal and Brad, we live in this every day, so we know every nuance of this. But the most normal people, most of them they don't know any of this. They don't even care about this because even if they get really into the weeds of the mortgage interest rates and the market, and they're not doing it again for 5 more years or 3 more years, so they're not experts. And so you need to have that expertise. It's like will there ever be knee surgeries being done without a doctor in the room? Like I'd probably bet against that. Like I think I don't get a knee surgery that often. I mean, maybe the doctor will use some cool technology so I can do it in 15 minutes. Rather than 2 hours, And, like maybe that will happen, but I'm still going to have a human in there talking to me, explaining to me what's going on, and handling it. It's like, so that's how I think about mortgages. They're like a knee surgery. You need to have an expert that focuses on knee surgeries, which is a broker. And at the same time, you can't just think it's going to just be completely technology gone. So human-enabled technology is how we think about it, and it's going to continue to be that for a long time. And so what will happen, though, naturally, and what we're already seeing in our mortgage industry, is with the technology, and this isn't even mortgage, just every industry, when technology comes, it creates efficiencies. And the more efficient things are, what happens is margins get compressed. So the amount of money you can make on a loan is less. So think about airline tickets. Once again, once they were able to do it all online, like it, all of a sudden, you had to be really competitive on your price, or you wouldn't be able to get that customer. He'll pick a Delta flight instead of a United flight or whatever it may be. So mortgages, technology is going to create lower margins across the board. So the people that have the biggest margins, the people that make 400 basis points, 500 basis points on a loan, they're getting hurt first. And then the ones that make 300, then 200. And so then brokers like yourself, instead of making an average of 100, 150 basis, you might have to make it a little bit less. Or on 200 basis points, you might have to make 150 to 125. Like that's going to happen. You have to do more business, but it will be easier to do more business because of technology. So margin compression will happen with technology in all industries because efficiencies are created. So you have to cut some of the costs out, and that's what's going to happen more than just push a button and get a mortgage. But it is the timing is fast. I mean, we're closing loans, and you guys know this because you guys work with us, and we partner together on these. And we're closing loans in 7, 8, 9, 10 days a lot. And the average we have right now is like 12, 13 days in our company. Like it's happening fast. And so will it get faster to 7, 8 days? Yeah, probably. But, it's not going to be, thumbprint mortgage, if that makes sense.
So are you worried at all that you are kind of feeding the destruction of your own business? So like, to your point, you want to build all this technology.
Such a fatalist. Dude.
You want to build all the technology to help the broker, right? Well, a lot of independent brokers are out there because they can have a shop of 3, 4, 5, 6, 10 guys, and the margin's hefty enough where they can make a decent living and be happy. Well, to your point, as technology grows, margins get slimmer, people drop out, competition goes down. The mortgage brokers are going to start slimming because the juice isn't going to be as worth the squeeze. So are you worried at all about your technology kind of depleting your customers?
It's going to happen anyways.
Yeah, so two things. What you just said, it's going to happen anyways, and we have to help lead it, but that's not how it's really going to happen. So I think of it a little differently is right now a loan officer, you work 50 hours a week and you make $2,000 a month. Obviously, you make more hopefully in a month, but just giving you an example, okay? What's going to happen, and that's 5 loans and you make that money, whatever the numbers are, okay? Well, in the future, with technology, you're going to still work 50 hours a week, but you're going to do 10 loans to make that $2,000 in that example. But you're going to still work the same amount of time. You're just going to have to do more units. And so, no, I don't think it at all. Like, if technology comes, the brokers are the last ones to get hurt. The last ones. Like the last man standing is a mortgage broker because they are the most nimble, the lowest overhead, and they have the best price and the most access to lenders. No question about it in my mind, they are the last man standing. So I actually think the reverse, that this is going to happen either way. And how far does it go? Does it go down to where brokers and originators only make 100 basis points a loan, but they can do 20 loans a month instead of the 8 that they do right now? Like, they're going to still be okay. They're just going to be more efficient. But the big lenders that have these 400, 500 basis point margins, they're the ones that are going to get squeezed and pinched the hardest. And those models don't work. And we're seeing it happen. I mean, there's layoffs left and right in the mortgage industry because people are saying, wow, the numbers don't add up. And they can blame the industry and employment industry, all this stuff they want to tell you. The truth is their model doesn't work. The broker model works. And we're all in on the broker model, and we're going to continue to be all in on the broker model going forward.
Yeah, I think that if you look at the future, right, it'll be interesting to see who made that investment in the next 5-10 years, right? Where let's say a mortgage does get down to a 3 or 4 day process where everything's pulled in instantly. However, with the margin compression, is it worth it for, let's say, Wells Fargo to invest in that technology, right? And
right,
like you said, the broker has the ability to latch on. I mean, essentially, in a matter of 60 days, open up their own business and latch on to a lender or a wholesale lender that has that ability to make them cutting edge and deliver that mortgage to the consumer, which will be very interesting to see as well what happens with the broker community. Like, I almost wonder if there'll be large brokers that merge, right, like nationwide brokers who can latch on to.
That'll happen for sure. I think that'll happen for sure. One thing that's happening that we're battling, I think, as a company is the race to the consumer as well, right? Like, we're battling huge marketing spends. We're battling technology. We don't get to the consumer first in our industry, generally speaking, because we don't have.
We're battling our own marketing spends, right? Let's say you co-market with Zillow.
Yeah.
They're a mortgage lender.
Yeah.
Right? And essentially, right?
Well, that just comes down to that comment on Zillow, and I have nothing against Zillow, but the way and I don't know anyone there.
Bullshit,
to be honest,
Matt.
So I can.
Sorry.
What's that?
I said it's bullshit. I hate Zillow.
Yeah, well, but the thing is, and that's how most mortgage people think that are business people, just like you said. Because the truth is, you're my competition. Like, Zillow just became your competition, and so if they become your competition, how are you spending money and helping them fund their business, right? And so that's how we think about it here. Is like, hey, I'm helping everyone. But once you become my competition, or the competition of my customer, then you become my enemy. And so, like, when someone's like, oh, well, Zillow's this, but they spend $28,000 a month. Well, don't complain about Zillow being your competition if you're giving them $28,000 a month, right? That's your competition.
Right.
So how do you handle that?
Right.
And everyone's got to handle it their own way. Like, some people think like me and some people don't, and that's okay. But just you got to understand those thoughts.
Yeah. So I've got one question, and so what I was saying is there's these large companies that are going consumer direct and are really gobbling up a lot of the clients before they even get to us as a broker. For us, our play right now is coupling with a real estate agent and making sure we've got really good relationships, kind of market a little bit as much as possible in our communities. But the reality is a lot of people, their first search is online, and they're kind of getting, going Lending Tree, whatever it may be, and these big companies that have these huge spends have the ability to go consumer direct, where we can't, it's very difficult for us to compete and get to the borrower first, which for us would be very valuable as a broker to have that currency to use in our market with our partners. There'd be nothing more valuable than saying, I've got 50 pre-approvals or 25 pre-approvals that I'm going to refer to my real estate network, and that would really change the game for a broker. And I guess my question is to you is, how can we compete on that level and try to go get to the consumer first? And the other question is, have you thought about any type of initiative that would help a broker like us get in front of them and actually create our currency that we can use in a market?
So, yeah, it's definitely a concern, and especially where do the customers come from? Where do they start? Do they start with the realtor? Do they start online? And then how's that flow work? You have to understand that flow. On a side note, just what you just described, Paul, how hard it is to get in front of that client the first time makes the comments that we talked earlier about the wholesale lenders even that much more valuable. It's so hard to get a customer the first time. Why would you put them in the arms of someone that's really going to go after them the second time? Like, it's so hard. It's hard to get business. It's hard to wow someone. It's like, it's just a crazy concept. So that's kind of how it ties in. It's so hard to get a first loan. And so what you're just describing is that some of these lenders that really invest in technology are able to get to those clients first before you can even compete. And so, yes, it's definitely something we're looking at to help independent brokers compete in that market. So everything that you need to do to compete, so that, because at the end of the day, and one of the big things we're doing to help them compete is educating consumers. When I go on to CNBC or Fox, like any of these things, it's the only benefit for me is to educate consumers. Make sure consumers know that you should go to an independent mortgage broker. There's a website called findamortgagebroker.com. You'll find a local person. Like, that's where you go find someone that can help you with your loan, findamortgagebroker.com. And that's why I'm on those shows trying to talk about it, because the truth is educating consumers and realtors about this is an uphill battle, because they don't know what they don't know. And so that's an opportunity. And then at the same time, helping you get in front of those leads quicker when they come through is some technology and some things that we're working on as well. It's not quite ready, but there's some ideas that we have behind it that could maybe help you guys compete in that world.
Do you ever see a company that has that spend, that is cultivating all these consumer direct leads? And do you ever see a company like that who wants to compete in the wholesale space? Because I do see that as a huge benefit. What if they decided tomorrow, and this is never going to happen, but let's say tomorrow they said, we're actually going to start funneling all these to our brokers, right? Do you see that ever happening?
You mean like converting a retail channel to the brokers?
It's not going to.
No, I'm saying.
I'm sorry.
I'm saying that if these people that have all these leads that are like doing all this marketing, and they potentially have a wholesale division. If they decided tomorrow to say, you know what, we're going to split it in half, and we're going to give all our brokers all this currency in the market, and we're just going to start feeding them. That would be really valuable to I feel like you've got to. If I were you, Matt, I'm just saying I would be like thinking about that. Like, how do I? I don't even think it'll happen, but it is something to talk about.
Yeah, it's not going to happen, and here's why. They might try to say it's going to happen, but what they make so much money on their retail loans, they would not give the ones, except for the ones they can't do. Like, oh, we can't get them to borrow left with us because it's better. Like, but you the only way to do that is to not have a retail channel. And if you made the brokers a retail channel, that'd be a powerful statement, and that'd be good for all brokers across America. But that's not the concept that these guys are doing and how they think about it. It's like, hey, we can't get the loan done. Let's throw it to this broker, and then and then there's always you always got to work on RESPA and the legalities of making sure if you give someone something of value with the expectation of something in return, that's a RESPA violation. And so you can't give a lead to someone without them paying for it, obviously. And so there's a lot of nuances in there, but what I definitely see people trying to be competitive in that respect. But the reality is, they'll give leads. People will give leads that they can't get done, or the borrower's not calling them back after their first 9 attempts. Well, great. Have Paul call them. Have someone else call them. And then then is it giving you value, or is it just giving you more work? And with a very low percentage of return. And so a lot of times brokers aren't really built for that. Brokers are built for relationships and working with realtors and working in their local community, and that's how they thrive. And I think that's what consumers want, and I think that's what really brokers want. And so there's definitely some things we think about in that world, and I think there's definitely something that could come, but I don't think that it's in the way you described it. Although, hey, I've been wrong before. I'm wrong a lot. So it'd be a positive thing for brokers in general, because the wholesale channel growing, back to my earlier point, is a win for consumers and is a win for UWM and is a win for every mortgage lender in America that's in wholesale.
All right, Matt, really appreciate you having on the show. I mean, everything you've talked about is really enlightening, and I hope our audience kind of got something out of it. If you had any parting words for the audience, this is the time, Matt.
Well, no, just thanks for having me, guys. I really believe, I'm passionate about that. Brokers are the best place for a consumer to get a loan, and it's the best place for a loan officer to work. And those two facts are why I believe this channel is going to continue to grow. And so we're proud to be part of it. We're proud to be the leader in wholesale, and we're going to continue to partner with the great people across America. It's going to be a lot of fun. Like, we're just getting started. 2018 was our best year of all time at UWM, and we're just getting started to where we're going. We're not even in the second inning of where we want to be. So there's a lot of opportunity, and we're excited to go out there and continue to partner with people like yourselves and other great brokers in America.
Well, congratulations on all your success, and obviously we appreciate your partnership. That's
Appreciate
it, guys.
your time.
Yeah, that's it, guys. We're all done. Matt, thank you again. Roll the
Thanks, guys.
Yeah.
Appreciate all of you.
Have a wonderful day,
Real
man.
Estate, the nation's top real estate podcast. Don't forget to follow us at irepodcast.com and everywhere where podcasts are available.